Well, good afternoon. Time to have a look at your market news now. Shares in the Asia-Pacific region were mixed as investors digested Japan's inflation data. Hong Kong's Hang Seng Index rising 0.1% and the Nikkei recovering from earlier losses to rise about 0.4%. The downbeat mood that we saw earlier today when we look at the markets followed a drop of about 27% in social media firm Snap in extended trading in the U.S. on poor results that flagged worries about advertising and wider economic slowdown. Meanwhile, locally investment company Astoria, whose primary asset is focused on South Africa's outdoor and leisure sector, says it has sold off its stake in open-pit mining group Afrimet for 54 million rand, injecting a similar amount into Cape Town headquartered protective gear group Liat Corporation. And then Grindrod has named Xolani Mbambo as the new CEO of the group's freight services division. He will take up the position in 2023, with Andrew Waller retiring after 4 years at the helm. Now to discuss the market dynamics, as it were, and also look back at the week that was, we are joined by probably one of my favorite analysts, the finance ghost, and he joins us live right now. Ghosty, thank you so much for your time. I mean, let's look back at that week. I mean, what would you say was the hallmark for you when you look at some of the events that played out in the markets?
Hey, Anastasia, thanks for such a nice intro as well. Yeah, it's been an interesting week. So obviously the suspension of Tongaat Hewlett, that was a biggie. A reminder that listed companies still come with risk, and speculative plays can end badly. We don't know yet how this one's going to end, but obviously a suspension of trade because they cannot finalize their financials because they can't fix their balance sheet right now is never good. And another thing we saw this week was yesterday, actually, we saw all the production and earnings updates coming out from the Anglo companies, and it was a good reminder of just how cyclical mining actually is and how earnings can very easily drop, 50% year on year. And also a reminder that when everyone gets so excited about a dividend yield of like 20% on these mining companies, you still have to be careful because it's so easy for the share price to drop 30 over the following year and your total return still ends up negative. So mining is a tough place to make money, and it's humbled many an investor or trader, that's for sure.
One of the key themes that is coming out, whether we're talking about U.S. markets or other parts of the globe, is the topic around a recession or possible recession. And it's quite interesting gathering some of the inputs from our past analysts about what they're uncomfortable owning in a potential recessionary environment. And I'm wondering for you, what are you uncomfortable owning as a particular play if we are going into a recession?
So discretionary retail always gets hammered in these scenarios. People just don't have money for a nice new TV or other new things for the house, unfortunately. But I think you've also got to be really careful of retailers who look defensive, but they aren't actually that defensive. In the last round of quarterly earnings, we saw Walmart take a horrible knock. People think it's a defensive retailer. They sell a lot of food. Yes, they do, but they also sell a lot of TVs, and that's where the margin actually sits. So locally, for me, a business like Massmart looks very exposed if we, get ourselves into serious economic trouble. I would also recommend being careful with something like Clicks. It looks very recession-proof, and yes, the pharmaceutical side is, but remember, they make their money in the front shop. They need to sell you toiletries, small appliances. That's where the margin sits, and that's where people cut back in a recession. You also need to always be careful with commodities. In a recession, growth slows down, so does demand for commodities. Obviously, it depends which ones. Like diamonds, for example, are doing incredibly well based on Anglo's results or update. Mining in general had a bad time after the global financial crisis and took a long time to recover. So just be careful there. Also, banks, they've done really well this year. But a genuine recession isn't great for them at all because it hits demand for credit, and inevitably it hits credit quality as well. So it's a bit of a double whammy. And the last one I just want to highlight is car sales, which is something I've struggled to get my head around over the past year. We obviously know about the supply chain issues, how that's driven prices up, driven demand for cars. Reality is the easiest purchase to put off in tough economic times is the purchase of a new car. It's the easiest thing to not buy. So I think businesses like CMH Motors, they've had a wonderful period, but I personally remain quite skeptical of how sustainable that is, especially with rates rising now.
Which is a nice segue into my next question. I mean, where are you seeing opportunities start to emerge after 6 months of turmoil?
Yeah, so as always, stock picking means you have to be willing to dig through everything and be really disciplined with buying. people forget that everything can keep halving in value until it hits 1 cent, and then mathematically it cannot halve again. So in other words, you can always get hurt again. Snapchat, perfect example. It rallied this week heading into its results, and then it got killed. It was down 29% overnight. So one of the companies we recently looked at in Magic Markets Premium is Levi's, the jeans, the clothing business. Great brand, great business, been around forever. They literally invented jeans, literally. And you're buying it on a humble price earnings ratio that is lower than some of the South African clothing retailers. So they are benefiting from something like the popularity of jeans at the moment in a hybrid working environment. Yes, people have gone back to the office, but guess what? They're all wearing jeans now. Everything has become more casual, and this is a global phenomenon. It's certainly not just South Africa. So they're doing really well. They're priced on this rather low multiple, and it's just a great business. So
yeah.
To give you an idea of how everything has just looked overpriced for a long time now, I think we've covered over 35 businesses in Magic Markets Premium now, and I think we've had strong positive conviction on maybe 4 of them. So investing is about saying no, not saying yes, and you need to be willing to dig.
Before I let you go, I mean, what would you say was the takeaway for you from the recent US banks earnings that we got?
So big drop-off in investment banking revenue. New listings have just ground to a halt in every market, really. So, for example, in JP Morgan, you saw underwriting fees collapse. Their non-interest revenue was down around 26%, I think it was. Their net interest income was up a similar amount, so they come out flat overall in revenue, which is quite remarkable. But something else that I just need to highlight there is US regulators have increased the minimum capital requirements that the banks need to hold on to. And the impact that has is it reduces risk, but it also reduces return on equity. And more than that, it actually sucks liquidity out of the system because the banks now need to retain more of their earnings to build up their balance sheet, as opposed to lending it out to consumers. So what this actually does is it's a clever way to try and fight inflation and suck liquidity out of the system that is less obvious to consumers than just going and raising rates. So that's an interesting move there by US regulators, and it definitely impacts the banks on that side.
Ghost, always great having you on the show. It would have been great to also throw into next week's earnings season as well. Unfortunately, we have running out of time. However, speaking of that earnings season, we do have the likes of Amazon, Apple, as well as Microsoft releasing earnings next week, and we'll unpack those for you as those numbers roll in.